Okay, so we will start the seminar, the webinar now. A very good morning to the US audience, a very good noon, so to say, for the European audience, and a very good evening to the Indian audience, because this is a webinar being telecast around the world. So thank you everyone for taking time out to join us in this webinar. Before I go to the two speakers, I'll explain what we are trying to do today. So this is what we call as a knowledge transfer at Carnegie India. And the session, as you are aware, is titled Demystifying the World of Cryptocurrencies. My name is Rajesh Bansal, and I head the Technology and Society Research Program at Carnegie India. Just a few words about Carnegie India for some of you who might be new to Carnegie. Is Carnegie India's sixth international center of the Carnegie Endowment for International Peace, which is itself one of the oldest think tanks in the world, more than 100 years old. The Carnegie India Center opened in 2016 in New Delhi. We have other centers in Beijing, Beirut, Brussels, Moscow, and Washington. Carnegie India is staffed with local experts who collaborate extensively with colleagues around our global offices. The center's research and programmatic focus includes the political economy of reform in India, foreign and security policy, and the role of innovation and technology in India's internal transformation as well as international relations. The aim of the knowledge transfer platform that we run is to provide a platform to facilitate the genuine exchange of ideas and knowledge among students, practitioners, subject matter experts, and other interested audience. So I will give you a bit of a background on why we thought of conducting this session. So as you are aware that cryptocurrencies, privately issued cryptocurrencies have been a very debated topic. And in April 2018, the Reserve Bank of India issued an instruction which disallowed any of its regulated entities from dealing or settling in virtual currencies, as they call it in the circular. The circular was then challenged before the Supreme Court, and the Supreme Court recently gave a judgment which says that the RBI's restrictions were a bit unreasonable under Article 19(1)(g), which guarantees the fundamental right to conduct trade and business in India, subject to reasonable restrictions. So hence, cryptocurrencies have sharply polarized traders, RBI at one end, which kind of closed the market, and financial analysts and regulators around the world. The IMF, the World Bank, the Bank for International Settlements have all been researching on what are the advantages of cryptocurrencies, and it will have a serious impact, a decisive impact on international economics and finance in the years to come. Now, coming to the speakers, we are lucky today we have Mr. Prashant Saran and Mr. Sidharth Sogani, in which they will provide a primer on cryptocurrencies and assess their impact on both national and international finance. I will be the moderator for the session. The format of the session is that we will have a Q&A with two of them, my moderating it. And after that, we will throw it open to the audience. As you are aware that this seminar or the webinar is currently being not just on Zoom, where people who are participating over Zoom can post their questions on the Q&A option in the Zoom icons that you see. And we are also streaming live on YouTube. So we will ensure that all the questions that you put up, to the best of our ability as well as time availability, we'll try and answer most of the questions, and I'll pose it to the panelists. Just introducing the two panelists. Mr. Prashant Saran is a career central banker. He has worked at RBI for 30+ years. His last assignment was he headed the banking regulation department in the Reserve Bank of India. And after almost 3 decades with RBI, he joined the Security and Exchange Board of India, India's securities regulator. And from 2009 to 2016 for about 7 years. And during his career as a financial sector regulator, he has dealt with extensive regulatory issues, especially at the intersection of emerging technologies and regulatory systems. Welcome to Sidharth, our next panelist. Siddharth is, I would say, a crypto, if I can afford to say, a crypto geek and one of the most knowledgeable people in the industry. So, giving his background, he's the founder and CEO of Crebaco Global, a research and intelligence company focused on blockchain and cryptocurrencies globally. Crebaco as a company aims at making blockchain and crypto industry more regulated and scam free. The emerging technologies, startups, and ideas can flourish. So he specializes in commerce, finance, foreign trade, and is a certified Bitcoin professional. So who else can we ask for? We have both the experts in the field. So with this introduction, I will pose my first question to Sidharth, because we want to understand cryptos because audience is varied. Some who would understand cryptocurrencies in detail, and others for whom it is a primer. So to bring everybody on the same page, Sidharth, I would like to ask you, what do you think is the, could you explain cryptos in brief? What is
Hey,
crypto? What is the underlying technology, and how does it work?
sure. Thank you so much, first of all, Rajesh, for having me here, Carnegie, and hello to Prashant, sir. Uh, it's difficult to sum up crypto in a few minutes, but I'll try my level best. So we have currencies. It's there in existence since, uh, you know, since mankind, right? So initially we used to use barter and different modes of payments. Uh, we have studied that in Stone Age, people used to mark the stones, and once the kings came into action, they used to mark the coins with their, the national emblem, and that was considered to be currency. So what we derive from there is currency is nothing but people, you know, people who trust something that this coin or this note or this medium of exchange holds value, and instead of doing barter, they give you that coin. So Bitcoin was, uh, I think, during 2008 there was subprime crisis. So people don't know who Satoshi Nakamoto is. It's a pseudonym, but I believe that during the 2007 and 2008 crisis, this guy Satoshi must have started to figure out different ways to uh, you know uh, develop a system which is not affected by the manipulations of the financial industry. So he came out with a decentralized model which had fundamentals of gold and every aspect which is required for a currency to work. It has to be a medium of exchange, a unit, and a store of value. So Bitcoin has all these three aspects. It is a digital currency. It doesn't have any physical existence, but it is like it's like when I send you an email, I have a copy of my email in my sent folder, right? And you get a copy of it, and you can forward it, just like how a WhatsApp message you forward it, and multiple copies can be derived out of it. But in crypto,
Mhm.
in Bitcoin, when you transfer your coin, suppose I transfer to you, I will not own any of it, and that can be verified on the blockchain that this transfer is taking place. So this is a decentralized model. It can be it is people who are not very technologically advanced, or they don't know about it, they might find it difficult to understand the fundamentals of it. But for the user, it is just the same as using your mobile banking app. There are several wallets which are there, and you can use
Mhm.
that wallet and take the recipient, just like how you take an account number and IFSC code. You take the address and make the transfer. uh, One thing before I, before we go ahead in this thing, there is Bitcoin and there is other cryptocurrencies. All right. So I am focusing more on Bitcoin because we have enough data. Maximum number of users are there in Bitcoin, and cryptocurrencies are currencies. You can call it tokens also, which use similar technology like Bitcoin, but they are not Bitcoin.
Mhm.
They are, like, if you see the entire market cap of cryptocurrencies, about
Mhm.
70, 67 to 68% is owned by Bitcoin, and the remaining 33 is owned by more than 5,000 crypto tokens. So when I would talk about crypto, I'm actually talking about Bitcoin.
Yeah. So Siddharth, if you could, as we said, it's more a knowledge transfer session, and we will
Right.
have people with different backgrounds, and not necessarily technology. So let's say me, I'm a layman, in India,
Hmm.
a middle income group who can use their mobile phone.
All right.
And because you mentioned about a mobile wallet, so could you explain? You use terms so that when we go ahead in the session, the audience has clarity on what these terms mean. You use a term called blockchain. So,
Right.
and you use crypto and Bitcoin. One
Hmm.
is, we want to keep the discussion focused on cryptocurrencies as such, not necessarily on one of them, but you can always bring in examples. So that's not a problem. So could you explain a bit more? You mentioned about 2007-8 crisis and decentralization. So use terms like decentralization, use terms. Could you, take a few more minutes and explain a bit more what is decentralization versus centralization, I suppose, and
Sure.
in a central system, what happens?
All right. So first, I'll start with wallet. A mobile wallet is just like how your uh, the SBI and all these banks, they have their mobile wallets and you are using it. It's just that when you are making a transfer, you are sending from say State Bank of India to Bank of India. That transfer is taking place, but behind RBI is monitoring that transaction and processing that transaction from State Bank of India to Bank of India. In mobile wallets, it's just like your bank. So suppose I have got there is a wallet called Jack's wallet, or there is another Samurai wallet. When I do that transaction
Mhm.
from my Jack's wallet to a Samurai wallet, the transaction is going from this bank, like consider that wallet as a bank, but the blockchain, the Bitcoin blockchain, is processing that transaction. So that is for the user, he's just using the wallet, but behind it, the blockchain is doing the magic. So the user does not need to worry about what is happening behind. That is one thing. Coming to decentralization, so there is fiat currency, which is issued by Reserve Bank of India or the Federal Reserve, the centralized government regulated bodies, I would say,
Mhm.
which
Mhm.
takes the responsibility of printing the note. And
Mhm.
so it's basically it's a debt instrument. When the 100 rupees note says that I promise to pay the bearer, Reserve Bank is taking the guarantee that this note holds that value. Bitcoin is
Mhm.
decentralized, so it's not regulated or issued by any person or any organization. It is a network, so there is nobody behind it. There are millions of miners and nodes which are recording the transactions, and those are the people behind it. So it's decentralized. Like uh, you can come out with some regulation to change the financial policies, but you cannot do anything with Bitcoin because Bitcoin is decentralized. So there are some miners in Iceland, some are in China, some are in Europe, some are in India. So it's that network is decentralized, and it's not uh, run by any person and an organization. So I think
Okay.
I managed to
So
explain
yeah. So
decentralized. It's
basically,
like
yeah.
a people's currency, and this is a government regulated currency.
Okay, I think that explains it well, that a decentralized versus centralized model, where there is fiat currency, issued by the central banks in the country, in India, and by the Reserve Bank of India, and
Right.
it's as I've read and learned from a lot of you, is that
Hmm.
it started from a movement which did not trust the financial system and the
Yes.
regulators, and hence there is complete disintermediation, so to say. And
Yes.
as you said, it's owned by people, so to say. Okay, this is great. So before I go to Mr. Saran and look at why does it give sleepless nights to regulators and governments, could you just spend a minute or two on blockchain so that we are all on the same page before we go on the discussion?
Okay.
And are
So
all, before you go there, are
hmm,
all cryptocurrencies based on the blockchain technology?
I'll come to that. So when I send you, say I'm sending Prashant sir one Bitcoin, uh, all the attendees, you, Carnegie, all the participants are actually viewing that transaction to which is taking place. Right? Just imagine physically you are giving somebody a note, and there are whoever is present in the room is actually recording that transaction. That record is a ledger, that this transaction has taken place. So Bitcoin is not only blockchain, it is a currency which has blockchain, peer-to-peer networking capability, and cryptography as solutions which make Bitcoin transactions possible. So what has happened today is now Bitcoin blockchain is different. I can come out with Sidharth blockchain. You can come out with Carnegie blockchain. There can be several blockchains. It is nothing but having your servers which are recording the transaction. Bitcoin's blockchain is the most strongest blockchain on the planet right now, because it has more than 1 million people, and anybody can you can start you know if you want to become a part of that blockchain, you can just download Bitcoin Core and start mining Bitcoin on your laptop. So the more it's like you don't need anybody's permission. You can just start mining immediately. So that transaction recording capability is blockchain. Now what has happened? People realize. Yeah, go ahead. Ask your question.
Go ahead. No, I'll come back to you on this, that I can download and start mining. What does mining mean?
Yes,
yeah.
I'll
Sorry
come
to push you on. Yeah. No, but we'll talk about it later. But please continue on this blockchain.
Yeah. So what has happened is, when somebody, people realize that blockchain is a technology which can be used for other purposes also. Like if there is a land record transaction which is taking place, you can make that transaction on blockchain, which can be verified. So if suppose I'm giving you that 100 rupee note, everybody in the room can verify, right? So if I'm giving you a piece of land, the entire blockchain can verify that transaction. So people picked up that blockchain aspect out of Bitcoin, and they have started implementing in governments. I think the Telangana government and the Karnataka government, they already started running prototypes where they can do land records, birth certificates based on blockchain. But those blockchains are centralized blockchains. They are released and moderated by the government. It's not decentralized. Like if I want to be a part of the Telangana government's land record blockchain, I cannot, because the government owns all the servers. So when the government owns it, it's a centralized server, and it can be manipulated.
Yeah, we'll go to the second order questions in a minute. So as thanks Sidharth for clarifying what is a cryptocurrency, a people's currency. It is not issued by the central bank, and it can be, so to say, mined. And I'll come to mining in a bit.
Yes.
So I will go to Mr. Saran and ask him, sir, if you could, come in and tell us that if, so to say, what Sidharth is explaining, if that is what it is, so what worries an ex-regulator like you, somebody who's been in regulation, what would be your views on what are the potential risks, and why did RBI decide to kind of ask its regulated entities not to allow virtual currencies to be a part of the system?
Let me thank you so much for having me on this webinar. And being a regulator throughout my life, I can't desist, giving disclaimers to begin with. That number one, that I am not representing any of the regulators, and second, I do not know what their thinking is. So all I present is this, that these are my personal views and how I look at it, and perhaps I guess that this is how the regulators might be looking at it. Now, since you have asked me a question on which perhaps I would have come absolutely the last, but let me begin from there. To my mind, the immediate worry of all regulators in general, and especially regulators in India, has been the kind of spate of Ponzi schemes which were so-called cheat fund schemes, which cheated perhaps tens of millions of people and caused hundreds of suicides and untold miseries. And the regulators had extremely tough time with the authorities, with the political system, explaining that what they were doing, and although whatever they were doing, they were kind of a blocked by various legal systems and all those things. So how basically why they are so much afraid of the entire story is mass scale people, middle class people, lower class people putting in their lives, saving into this kind of coins, and then the market collapsing or something happens, and then the regulators are told that were you sleeping all this time. So in their opinion, it is not a particularly advantageous to adopt this technology, whereas some people, not the technology part, but the Bitcoin part or the coin part of it, they are rather skeptical of it.
Okay. So, sir, if I can ask, Sidharth started with explaining how, the history of coinage and how, marked coins were used for time immemorial. And then China introduced the first paper currency and all of that happened. So he used, and I'll come to why you're calling it a Ponzi scheme once for the audience. There's clarity on, you worked at both RBI, which is the issuer of currency, and at SEBI, which regulates all asset classes, so to say. So in your view, would it be, if you were to classify cryptocurrencies, privately issued cryptocurrencies, would you classify it as an asset or currency, and why? Where would you, put your bets, I would say?
Well, there are a lot of things which are in the nature of duality. That whether there is Atma and Paramatma is one, or they are the same. Whether light is a wave or a particle. So similarly, there are some dualities which are perhaps unresolvable. I think it is perhaps one of those dualities. For example, gold itself, it's always a problem whether it's a commodity or whether it has been currency. It has been a currency for a long time, and it has been a commodity for a long time. So if we are to examine the entire gamut of the cryptocurrencies, we must examine them both as currencies and as asset classes.
Okay. And sir, what are the properties because of which you will classify it as an asset class? Because Sidharth has been, talking about it being a currency. So what are the key features, of an asset?
Asset class, it lacks one very important feature of asset class. That I'll come later. But what is asset class to an economist is different from what is asset class to an investor. To an investor, whatever I invest in, if it grows into 1 rupee, goes into 10 rupees, then it is perfectly fine. So they are okay with this kind of a situation, bargain, that I invest 10 rupees, I may land up with 5, I may land up with 50. So for an investor, this is only the meaning of asset class. For a regulator, asset class means something slightly more than that. For a regulator, reasonable asset class is one which is at some stage, not necessarily at the first stage, the assets class can be derived, but at some stage, 1 layer down, 2 layers down, or 3 layers down, there is something which is there at the substratum, which is tangible, consumable, or if not tangible, consumable, at least aesthetic. So there has to be something which can be enjoyed. So for regulators, it's difficult to swallow this thing as an asset class. But for an investor, it is very easy to understand it very easily as asset class. I bought a Bitcoin for $2,000. Now it is $10,000. I have gained $8,000. So that is asset class for an investor. So we must always understand that different people give different meanings to different words.
Thank you. And I think the parallel or a corollary that you derived with gold is an interesting point. You're right that if we are in a room full of people, you're not sure whether we'll necessarily all agree that gold is an asset class, because some people do believe that gold is still a currency possible. Yeah. So coming back to Sidharth, could you tell me, you mentioned about a wallet and, how it is equivalent to that. So I can, do a minimum KYC or a full KYC and get a wallet. Or if I have a bank account, I can use UPI to transfer money. Could you tell us a bit about how an individual or an audience on this call can potentially buy a cryptocurrency? And, what are the risks you think when the person is buying a cryptocurrency? Sidharth, you're on mute.
Oh, yes, now it's better. Can you hear me?
Yeah, could you start again? Yeah, please.
Yeah, so cryptocurrencies and fiat currencies. In fiat, if you want to open a bank account, you have to go to the bank, or give your Aadhaar, PAN card, authorize, give your address proof. There are about 1.6 billion people on this planet who don't have such documents. Maybe they are in Africa, in jungles. Those people, they are not a part of the financial system, but they do have a smartphone now. $100 smartphone is all you need to get started with Bitcoin. All you have to do is download the app, and if somebody is ready to buy, give you Bitcoin, you can accept that Bitcoin. If you want to buy Bitcoin, you can go to some exchange, deposit the fiat currency and buy Bitcoin, or you can just mine Bitcoin yourself. So there are three ways to get into the Bitcoin or the crypto ecosystem. What more is, I think it is important, is Bitcoin is giving access to the unbanked, and where there are places on the planet where bank accounts are not there. I mean, people don't have documents, there are no banks. Those people can leverage this technology and be the part of the global economic system. What people make mistakes is they don't understand how the tech works, and sometimes they get hacked. People lose their cryptocurrencies. So I kept these things handy, like this is a nano ledger device where you can store your crypto, and nobody can hack into this. So if this has the private key of your Bitcoin or maybe any other currency, and if you store it here, nobody can hack it. But if you keep it on an exchange, which is like a third party exchange, and that exchange is compromised in security, then you lose your crypto. So if it is not in your hand, or in your, you don't possess the private key, you don't own that Bitcoin. Similarly, now the technology has evolved. There are these cards which, if you press, there's a button, and it has Bluetooth. It connects to my phone with a mobile app, and if I click here, only then the transaction takes place. So the technology wise, there are several other parameters which can be used to safely transact in Bitcoin and not lose your Bitcoin.
So let me ask you, sorry to interrupt,
yeah,
you mentioned exchanges. So are you
correct.
saying that either it's equivalent to either keeping my money on my mobile device with encryption standards and a private key being available with me on my pen drive, or you could keep it in an exchange? Is that equivalent to keeping it with a bank?
It's like you are keeping your cash in your in your pocket and you are keeping the cash in the bank. If there is a robbery in the bank, your cash is lost. But if it's in your pocket, it's not lost. So you are liable for the money which is there in your pocket.
Agreed. But sorry if I had to push you on that, but let's say
Yeah.
you gave an example of if there is a robbery in the bank. But
Hmm.
as you are aware that there is a robbery in the bank, I still don't lose my money, right?
Right.
It's for the bank's internal mechanisms and its own insurance. So let's say I keep money with an exchange, crypto exchange, and there is a hack. Can I still get my Bitcoin or no?
That is up to the exchange, because here a third party is involved. Exchange is a third party, and
Okay.
in a banking system, RBI is the third party. But in crypto, you are responsible for your own money.
Okay, okay, that's interesting. Can I request Mr. Saran to come in? Sir, I don't see you. Yes. Sir, you are on mute. Yeah.
Yes.
So, sir,
Now,
Sidharth mentioned about exchanges. Could you tell us a bit about, traditional exchanges, as you would call it, whether it is a stock exchange or it is, commodities exchange, and what are the key risk management prescriptions which SEBI has done over the years, or globally others have done? Because you mentioned, it'll up to the crypto exchanges. So maybe there is a learning from the traditional exchanges, if I can call it.
the basic reason why you should have exchange is this, that it's a question of simultaneity of demand and supply, need, simultaneity of needs. So supposing I have got some shares, now I want to sell it. Now, how do I know who is there who is interested in my shares? So to meet the issue of simultaneity of needs, what you do is to create a centralized place where the buyers and sellers can meet. So normally in a vegetable market, this does happen, that the buyers and sellers do meet. But vegetable market is a local vegetable market and has got a limited number of people. But the moment the number of holders of securities are extremely large, so what you need is another layer of intermediaries who are the brokers. So the millions or hundreds of thousands of investors, they go to a few hundred brokers, and these few hundred brokers, they congregate in a place which they used to call, traditionally called a ring, and then they used to call out that who needs this much, and then somebody says I'll need this much. So this was how the demand and supply were met, and the back room of the exchange, which was basically a brokers association, used to settle that which broker has to get how much, and then the brokers will go and settle the accounts with their clients.
Yeah.
Now the problem in the entire setup was that supposing I put all my life saving, I gave it to my broker, I told him to sell my shares, and he sold the shares and scooted. Now what do I do about it? So that is the problem of for the reliability of the brokers. So then the exchanges, then they said that, okay, perfectly fine, we will create a risk management system. Now this risk management system is created in various ways. For example, in derivatives, it is considered by a central counterparty, which is the exchange, which becomes buyer to every seller and seller to every buyer. So that is one kind of a model for risk management. And the other kind of model is the normal, the cash exchanges, where what happens that the brokers, when they put in a buy call, so they have to give a certain margin to the exchange. That, okay, this 100 rupees transaction, so I put 20 rupees upfront. So this kind of all these monies which are pooled together, that acts as a backup for any broker default. And so there are various ways of calculating margins and all those things. Basically, it is a part of the deal is given upfront, so that at T+2 time, if somebody doesn't have, if some buyer says, I don't have the money, he's not there to pick up and doesn't make the payout. So what happens, the exchange will get that those shares and sell it on the exchange to somebody else. And if there is a loss in that, so that margin amount will come to do away with the loss. So this is the arrangement which the regulators have reached.
Yeah. So as you explained that, how the stock exchanges have evolved, and there are certain risk management procedures being put in place. And I'm sure, Sidharth, I don't want to labor on the point of exchanges because we need to go into other topics for want of time, but I am sure the crypto exchanges, especially in India, when they're a bit new and recently had the RBI and then the Supreme Court kind of putting the circular back on the table of RBI. I'm sure the crypto exchanges would be looking and taking a learning from the traditional exchanges on what could potentially be done. I'll come to specifically the circular itself. So, Sidharth, could you tell us what are the mechanics or what are the details of the circular, and how did it impact the industry?
The circular which was for the banning, right? The initial.
Yeah, because I want you to clarify, if I can come in. The narrative is RBI banned cryptocurrencies, Supreme Court has allowed cryptocurrencies, which is really not true. So could you tell us a bit more about that?
Okay, I would say that the approach of our government has been wrong in regulating Bitcoin. So let me just explain. Bitcoin is a decentralized currency, and smart contracts which use similar technologies are different. So you cannot regulate Bitcoin because Bitcoin is regulated by its own protocol. So when you say that I'm banning Bitcoin in India, people who have access to internet can still use peer-to-peer transactions. So when that circular came in 2018, I believe, right? So in April 18, the circular came in that
April 2018.
the circular came in and said that the banks should refrain from operating with cryptocurrency exchanges. The cryptocurrency exchanges were still operating. People who had Bitcoin with them could find another buyer or seller on peer-to-peer exchanges, go deposit their Bitcoin. So the exchange becomes like an escrow account, and the transaction is sent to the buyer or the seller through IMPS and NEFT. And once the transaction is completed, the exchange as an escrow releases that Bitcoin to the second party. So when the government says that we want to ban Bitcoin, it is first of all not possible, not at all possible. You cannot buy a layer over you cannot ban a layer over the internet. What you can regulate is fundraising, ICOs, and Ponzi schemes which are running in the market, like how we had mentioned earlier, saying a banana coin. So banana coin is a privately run Bitcoin, similar to Bitcoin. It's a privately run virtual currency. So when we look at Bitcoin and we look at other currencies, we need to understand that this is decentralized and this is centralized. So you can regulate what is centralized. You cannot regulate what is decentralized.
No, I get your point. I mean, the main point you're making is it's not possible to regulate. But if you could, for paucity of time, focus on how did it, impact the market and the participants. And as you explained that the participants were still able to, redeem their Bitcoin, so to say. And also, what did the Supreme Court judgment, as we know, it said it's an infringement of Article 19, which is, right to freedom. Could you tell us after that, what is the impact on the industry and what is the industry's view on where this is going?
So after April 2018, a lot of exchanges could not operate because they were, unable to receive fiat and deposit fiat into the client's account. So big exchanges like ZepPay and Uno Coin, they stopped their operations, and ZepPay was one of the biggest exchanges at that time. They moved their operations. They went to Australia and Malta, and they're still operating at other places. But the emerging exchanges in India, they had to either shut down or they moved out of India. So that is one of the major impacts. Further, people were like the new nascent investors who were exploring possibilities of starting new businesses around the crypto ecosystem. They were unable to do so. So they opted to go to countries like Singapore, Thailand, Dubai, who are promoting crypto and blockchain. So India, according to go ahead.
And sorry. So I'm saying, and after the Supreme Court judgment, how is the industry, looking at it? What's your view?
It is so India's crypto's potential market size is around $12.9 billion. So if we see the expertise which we have, the trading volumes which we observe, so based on that, there is a complete working. If you Google it, you will find it. But the $12.9 billion market size, like, is now looking possible to achieve. But we still need more regulations on how ICOs should be conducted, how a company which wants to, build more technologies and build more mechanisms in the industry, those regulations are not yet in the place. For Bitcoin, it is liberal, you can still transact. But if you want to start a new wallet in India, which is like Bitcoin India wallet or something like that, you want to build a technology or a wallet from India, you still can't do it because there are no regulations. So what they do is, even if they name it as Bitcoin India wallet or India crypto or something like that, they will go and incorporate themselves in other country, because here the regulations are still not clear.
Okay, thanks, Sidharth. Sir, before we go to the audience questions, one last question to you. Because of certain concerns, and I didn't get a chance. I didn't give you a chance rather to talk about some of the concerns which, and I've spoken to regulators, is also to do with money laundering and consumer protection. And you, in some ways, did allude to this by talking about Ponzi schemes. So where do you think, what are the possible options for India as a country to go forward? Because there was a banning act which has never been introduced in the parliament. And so what are the options, and in your personal view, where do you think industry is going? Sidharth, as he rightly said, there is a good possibility of, developing future products and seizing the market opportunity. So I'll come to you, Mr. Sir. Sir, you are on mute.
Before I go into the questions which you have raised, let me clarify a little about the RBI circular. Perhaps what Sidharth explained was a little not very, what really happened.
Sure, sir. Go ahead. Yeah. I was trying to nudge him, you are ex-RBI, and so maybe you can.
RBI doesn't have any power to ban any currency or anything. They can issue directions under Section 35 of the R Act, which is basically to their regulated entities. So this is there's no question of banning. So what RBI circular did was, since RBI believed that this is what I understand. Since RBI believed that common people may lose a lot of money investing into something which they really don't understand, so I will not allow my banking system to be used for that. So if you are carrying on your currency exchange thing, go outside that thing, it is not my regulated area, don't worry about it. But all I am telling my banks not to get into this thing, and this is what Supreme Court said, that this has ruined the livelihood of certain people who are running the exchanges. So
Okay.
this is exactly what the circular was, and this is what exactly the judgment is. And they said that the circular was not backed by enough data and was disproportionate. So that was the Supreme Court's opinion on it.
Yes.
Now, coming to the other part of it, that what do I personally think?
Yes.
So personally, I think, to be very honest, and at the risk of inviting kind of a very strong reaction,
No, sir,
I
please go
would
ahead.
say that the entire cryptocurrency thing is still a toy. It is not, and it is it's a toy right now, but it was envisaged as a philosophy. And the philosophy was, it had a narrative of freedom, that I don't trust the central authority. Central authorities are perhaps, they are evil. So let's not. The central banks, they can debase the currencies at any point of time. So let's not trust with them. So they said, no, perfectly fine. We will have a decentralized peer-to-peer thing where it's what Sidharth used, a very correct word, it's a people's currency, and the people will actually use their own currency and will not be dependent upon these central banks' fiat currencies. So that was the original philosophy, which I understand, and which I think the Bitcoin purists are, like Wendy McElroy, are even now insisting that we have lost our narrative. I am with Wendy McElroy because when I degenerate into a kind of a situation where there have to be exchanges to buy and sell against fiat currencies, then we have lost the philosophy of the entire thing to begin with.
Yeah, sir, if I can,
Economically,
sorry,
it is.
sir, sorry if I can, interrupt a bit. So, because we are realizing we already with just 40 minutes left, and we want to give chance to the audience. There are a number of questions. Coming back to where do you think, what is the way forward? One is, the ball is in, so to say, RBI's court, but as you said, RBI cannot regulate it. So options before RBI, before the government of India, if they are very clear that this is not to go forward, and if it has to go forward, as Sidharth says, there has to be regulatory guidelines which will get issued to ensure that the industry has some certainty. So what is your personal view on that?
See, regulation, you cannot regulate the cryptocurrency. It is meant not to be regulated. Yeah. If it can be regulated, it is no cryptocurrency. Yeah. Then it's absolutely not. So what they are asking is to regulate certain exchanges. So regulating bitcoins is like regulating the ocean waves, regulating the air. So you just don't attempt doing it. Okay. There's no way in which you can jump into, unless you have got that 51% computing power, you cannot come and regulate it. So I do not see a chance of regulating the currency. What they can regulate perhaps is the exchanges, where they can put margin requirements, there they can put some other things to ensure that in case there is a collapse, or then what they do is to run those ad campaigns like mutual funds. They'll say that mutual fund investments are subject to market risks. Well, if you are coming to Bitcoins, please be aware, you can lose it heavily. They were doing it for the last 3 years, but the lure was too heavy. So that is why, that is one thing which in case they are seriously about regulating it. Now the question is that who will regulate it? SEBI is unlikely to regulate, saying this is not a security, go and amend your SCRA. RBI is not going to regulate this thing, and at the best it will put certain precautions to the banks, so that the banks should not lose money, or banks and RBI should minimize their reputation risk in case of a market collapse. So that is what they are going to do. If anybody can regulate it, so government can create a new regulator or assign it to amend the SCRA, define it as a security. SEBI will be forced to regulate.
Okay, I get your point. So these are the options that we have. So thank you very much. I'll come back to both of you. We have a lot of questions. Sidharth, I see you raised your hand, but please, bear with me. I'll go to the audience now. Number of questions. So we'll start with a question which has come from Major General Pawan Anand from USI of India over email. So the question is to Mr. Saran, and Sidharth, you can come in and I'll see. From a strategic security perspective, what are the implications of legalizing cryptocurrency on the sale and purchase of banned items? Basically, what he's trying to ask is, would it make transactions by underground workers of terror organizations untraceable? So he is saying, what are the implications for, the usage that we have seen in the dark web? What is your view, Mr. Saran?
Yes, I mean, if the cryptocurrency stands to its original promise, it must give complete anonymity to the person who is using it. Definitely, if somebody comes through an exchange, then the exchange can definitely trace him out. So I don't think you would be doing a very nice thing, that if you are going to buy things on the dark net and then you go to the exchange and to get your currency and all those things, so you will be doing your KYC there. You should do it. So you should be totally out of the radar. Otherwise, I don't think you can. The basic purpose would be lost.
So you are saying that if I continue to be in the private cryptocurrency world, then it will be difficult. It reminds me of a recent, this thing where, the US government has asked Iran to put 2 Bitcoin addresses on under the FATF monitoring list. And I read that the exchange, the Bitcoin industry and the cryptocurrency industry was, if I don't not know who the person is virtual, I'm not sure how I can put it. So that's an interesting point that you brought in. That can I bring you in that, there is another thing that is being discussed about security. And you mentioned centralized versus decentralized. So we have, a question from Jayesh Nair, where the question is, how can crypto users be confident that large-scale theft, such as mine jocks, GOX, does not happen again? So would you want to talk a bit about the security issues and some of the hacks that we have seen?
Use this and you will never lose your crypto. When Mt. Gox got hacked, this was not there. I think Mt. Gox got hacked in 2013 or 14. And at that time, hardware devices were not available. Now there are hundreds of hardware devices which can store your crypto securely, and sending a transaction from it is very easy. So,
yep. Okay. No, thanks. I think that was a very simple answer.
If you don't have your private key, you don't have your Bitcoin or your any other crypto. You must have your private key in either of the hardware devices or on paper. You can even write that private key on a piece of paper and keep it.
Yeah.
Nobody
I
can hack it.
am tempted to ask a question on myself, but I'll hold on to that thought and prioritize audience questions. Now another question to you, Sidharth, is that from Kiran, who says that since multiple ledgers can be located in any part of the world, how can someone track and settle transaction if disputes arise?
Okay, so here you own the crypto and you are responsible if there is any problem. Here, it's like if I'm sending you an NEFT, that money has gone into your account. Now, if there is a dispute, it cannot be regarding the transaction. There will be a dispute related to the business which we have done, and for that the transaction has taken place. The transaction is clean. It's dispute free.
Okay. And Sidharth, if we can just ask a very simple, what is the time lag between, when I send money using crypto to you? Is it a few milliseconds or is it a few minutes? Just could you
Usually the
briefly tell us in 30
notification
seconds?
of that transaction is instant. Like if I send you a Bitcoin, it will reflect in less than a second. But the settlement takes time because it is done on a blockchain. So it can take from any time from 1 minute to up to 90 minutes. And if you usually the Bitcoin transactions can be free, but we always add a transaction fee to it so that the miners and the transaction gets confirmed fast, so that it is spendable as soon as possible.
Okay. So what you're saying is, because there is a bit of an interruption, is you're saying that it can be a couple of minutes to 90 minutes, and some of the exchanges, a couple of seconds to a few minutes, even up to 90 minutes. And as far as charges are concerned, it varies. Yeah. So I'll go to another audience question, which is, I'll keep with Sidharth and then go to Mr. Saran. There's a question from Shweta Banerjee. She asks Sidharth, what is the relationship between gold and Bitcoin, if any?
Okay, so this is a long debate, but yeah, gold and Bitcoin both are store of value. Gold is backed by consensus of the entire planet. The governments believe in it, and it has a history of 3,000 to 4,000 years. Bitcoin is also backed by the consensus network, but it also has mathematics behind it, because each transaction is mathematically secured and maths can't go wrong. So both I would say the most relevant factor which is similar in both is both are a store of value and are can be treated as a mode of payment, as well as it can be treated as a commodity as well, like how gold is.
So, okay, I get it. It's interesting, the parallels between, how many times gold comes in, and I'm sure, as you said, it's a long debate, gold and cryptos. So, Mr. Saran, a question from Rijoy Bhaumik is that, given that the Supreme Court has ruled that cryptocurrency is a commodity, do you envisage a situation where data itself would become a form of currency? If so, then what would the state need to worry about? And how do they regulate?
Yeah, I mean, actually, I think it's an extremely relevant question. No, and Bitcoins is a small thing. The data per se, the kind of a mammoth data which perhaps Google has already collected. This is something which is worth much more than all the gold in the Fort Knox. Okay. So this is something with which people are struggling, and people are struggling with the data privacy laws and all those things, but looks like the cat is already out of the bag. And one doesn't know where this data thing is going. I mean, when this data problem surfaces itself, Bitcoin would be a small pinprick for the governments.
Okay, so you are saying that it's nothing compared to the $12 billion size which he mentioned of the market. I mean,
just
$2 trillion.
Mind-boggling.
Yeah, $2 trillion Indian economy, 80 odd billion dollar global economy. Maybe the size of the data market. Yeah,
data encompasses future value also.
Yeah, future
data is totally mind-boggling. I'm not able to comprehend data.
Okay, no, I appreciate that, sir.
Data is the future oil.
Yeah. So
I mean,
again,
oil was nothing. I mean, the
Yeah.
data is really something which we are really not we are not able to pinpoint what's the issue there.
Yeah. So Sidharth, can I come back to you? Dr. Sanjay Jain asked a question. His
Mhm.
thing is, what did you think there is any impact of a post-COVID world, and does it change in any way the outlook for cryptocurrencies?
Okay, so post COVID, I think now we all are like how we are communicating right now on a webinar. We are all locked at home, and post COVID things. Uh, Now, if I want to do a transaction, I have to go to the bank and do it. If I have a cryptocurrency, I don't have to go to the bank, and I still do it. So post COVID, I think this and also one more thing, like a lot of industries are struggling to work in this scenario, but we in blockchain industry or the crypto industry, we are all working at 100% capacity. So post COVID, I think people will realize when we are in recession, people will realize, and I think this is a very relevant time for Bitcoin to prove its use, and it will be people will now understand, because now Fed has pumped in so much money. The government of India has really issued so much stimulus packages,
Mhm.
but we all fail to understand that when the government is printing money, you are actually losing the value of the money. So it's like if you have 1 lakh rupees at home and the government is printing money, the value of that 1
Mhm.
lakh rupees is going down. Now, different economists have different opinions towards it, and of course, government is able to mitigate the risk in the short term, but in the long run, printing money is not good. So I
Yeah.
think Bitcoin will solve that problem, and
Yeah.
post COVID, we'll
But there's
see
an
more
interesting,
users.
yeah, interesting point that you mentioned inflation and
Hmm.
how the current quantitative easing by central banks could lead to inflation, and then the price of the rupee that I hold will go down. It will be an interesting point to see. I mean, we don't have time to discuss how if cryptocurrency, if that becomes a medium of exchange, how will inflation play out in that scenario? But it's a
The supply
topic
is
for,
limited, so it's not
yeah.
inflationary at all.
No. So I'll come to that in a minute, because then the question is who decides the supply. But I don't want to go there in a minute. Okay. So this is addressed to Mr. Prashant Saran. So what Japan has done, Mr. Omi Marwa asks, why can't India create an independent regulated virtual currency exchange as the Japanese are doing? You answered some part of that in your, what is the way forward? But anything else, sir? What do you think of an independent? We understand that there might need to be a new regulator, or the SCRA might need to be amended. So, do you think a kind of an NSC for VCs with the right regulatory framework is something which can help mitigate some of the risks that we have seen in cryptos, and not and consumers are protected so that it doesn't become another Ponzi scheme?
Mm, I mean, you see, Ponzi scheme would be on basically ICOs.
Right.
Ponzi scheme is ICOs. So that is one kind of worry. The other part of is this that whether Bitcoin as currency. So Ponzi schemes, I mean, ICOs are nothing but you are saying that this is my future value, so you get a security today. So ICOs are like securities.
So,
But
so just to clarify to the audience, ICOs are initial coin offerings. Yeah. If you could explain in
so
a line what that means. Yeah.
see, the other part is this that if there is a Bitcoin, if people are purchasing Bitcoins, so you can definitely have a regulator, but that regulator, if he's there, he would also be more intrusive perhaps than what Satoshi Nakamoto ever thought of. what he will definitely do, for example, he will not like, because there are foreign exchange regulations in India. So you cannot transfer money beyond a particular limit in a year. Now, if I am totally unregulated, so then I can straight away convert my fiat currency into that, and the money is gone, and RBI is never wiser, because RBI has got only one way of controlling foreign exchange flows, that is through their banks. So they will have to, and then the issue is that whether this money is being used for terrorist financing and all those things. So that exchange will have, that can function, and that can mitigate the risk of the exchanges collapsing. That is the risk they can mitigate. But they will, the price you will have to pay for that is a huge amount of intrusion in your privacy, which was the basic philosophy of the cryptocurrencies. So when you can have a Faustian situation, well, I can sell my soul to
No, that's a good point, sir. I mean, the fact that it originated as a people's currency and a completely decentralized currency, it was, as you rightly put it, a Faustian situation where, the industry might be asking for regulation. But before I, go into, there's a long discussion we can have. So that's, could you explain very briefly what is mining? Because you mentioned mining in your initial introduction. And I think related to that, you could also answer. So this question is from Aditya Bapna, and just adding a sub part to it, that who decides how much to mine, so to say.
All right. So when I send, say, 1 Bitcoin to Rajesh, what is happening is people are recording that transaction in their ledgers. But why would I do that? Why would I record it? So the Bitcoin blockchain is such that whenever you make a block of transactions, a block has about 2,700 transactions on an average. So if I manage to deploy my server, there is a ASIC mining machine. ASIC is application specific integrated circuit. It is a specific machine to mine Bitcoin on a Bitcoin blockchain. So if I deploy that machine is expensive. So if I install that machine, I deploy my electricity, I pay rent, I pay salary to one guy to maintain that machine. What am I getting in return? So when I manage to deploy that machine's hash power into the network gives me Bitcoin, newly generated Bitcoins as a reward, which I can go in the market, sell, and pay my rent and asset cost and everything. So who decides how much, what mines is depending on the hash power. Now, say on one address or on one node, there are 1,000, for example, 1,000 hash power, which is being, deployed into the network, and a bigger mining pool, which has 10,000 hash power. So the chances of that 10,000 hash power to calculate more transactions is faster. So this is how it all depends on the hash power, but the network is not biased. So once that node mines that transaction, it does give a preference to the other nodes to do the mining as well. Because, if I deploy, say, 1 lakh hash power, I'll be the only one who's mining blocks first, right? So the network is not biased. It has a different algorithm which calculates who gets the block reward depending on who solves that transaction first.
Okay, so what you are saying is, in simple terms, and I know you are a technology person, so I'm just trying to simplify it here, is that if I deploy
I'm more of not a technology person.
So if I provide some resources, so I get paid for my labor through a Bitcoin, if I can put it like that. Okay,
correct.
Thanks. And this is very helpful. So we have, another question, okay, from Hitesh Gajaria. Hitesh asks, and this I will post to both of you, is why would anyone want to use cryptocurrency? Purely as a speculative medium? And what can crypto buy that Indian currency cannot? Maybe I'll stick to Sidharth for that, yeah. Sidharth?
Okay, so crypto is not challenging any central bank or any central fiat currency. It is an alternate medium of exchange for those who need it. That's what I would say. If I want to use Bitcoin, I have a decentralized. It's like, you like Pepsi or you like Coke. Some people
Okay.
like having Coke, some people like Pepsi, some people like Thumbs Up. It's up to you. So previously we did not have option. We had to go and use US dollar or Indian rupee or any central government fiat currency. But
Mhm.
now it's an alternate. So I don't say that Bitcoin can buy everything, uh, which fiat can buy. Bitcoin is still not very well adopted. You can't use your Bitcoin in India in a cafeteria, right? But with your Indian rupees, you can do that. But it solves the problem of being as an alternate currency where wherever you need it, you can use it.
Okay, thanks. So coming to you, Mr. Saran, I know you have again answered a bit, some part of it. So Anurag Rao asks us over the Zoom chat, is there any chance of the draft banning of cryptocurrency and regulations coming back into the picture? I know it's speculative in nature, but given your experience, what would you say? Is that an option which could be seriously considered by the government or should be considered?
I mean, this would be beyond my capabilities, so to guess what the government is going to do. I really don't know.
Okay, okay, no worry. So yeah, thanks for that. Then, then there are other questions on dark web. Okay, another question which I'll request Mr. Saran and to come in is assuming that virtual currency is somehow regulated, what potential impact it can have on the fintech market in India? And Siddharth, you can also come in.
I mean, so far as I think that if bitcoins are adopted, then it is something like this, that number one, you can allow bitcoins for the normal people to trade and all those things, provided you are comfortable with the total capital account convertibility. That you don't mind at all. That so you should not have exchange controls in place at all. So that is something which will not happen till the exchange controls are there. So that is one thing. And can you remind me of the question once again?
So the question was that what is the impact on the fintech market? And you actually are answering one other question. I'll come to that in a minute about forex market, and I think is related to the capital account convertibility in some ways.
So on the fintech market, well, I mean, fintech market is innovative. They will find some use, something of it. And if they can beat the present products, if they can come out with a Bitcoin or DLT based products which can beat the cost and the convenience of existing products like IMPS. So then perfectly fine. It's a technological challenge for them that I think right now IMPS is quite a difficult product to beat. So,
I would like to
Okay.
comment,
Yeah, please.
if I may.
Yeah, go ahead, Siddharth.
See, fintech is this crypto and Bitcoin is a completely different ecosystem. It's not the traditional IPO and banking system. It is a different ecosystem which has its own banking capability, its own fundraising, like from ICOs and IEOs and STOs. So if it is regulated here, this entire ecosystem has to be built, and there is enormous potential. I don't know how many billions it will be, but it will be wonderful. Like Nasdaq is running prototypes on running their settlements on blockchain and crypto. So when you regulate it, you give that technology a chance to evolve and develop products which I can't even imagine. There can be. We did not know that we could speak like this. You let
No,
internet
no, no,
evolve, and
yeah,
it is
yeah.
giving us an opportunity to speak where we are sitting at our residence, right? So
Okay.
it has enormous potential.
Okay. No, thanks. I think I'll just take one more question and then I'll give a chance to both of you to give a closing remarks. This is relating to pricing of transactions, Siddharth.
Mhm.
So Mr. Vijayant Pawar asks over Zoom, if transaction fees are less, then is it possible that the one's transaction never gets committed in the blockchain or added to the blockchain? Or is there any other timeline, or so to say, will it get timed out, or is it time bound also that will get committed after a lag?
All right. So when we commit a transaction on the blockchain, and suppose it does not have any fee, it has zero fee, no miner will get a benefit. So like I'm just going back a little when I
Mhm.
explained mining. Like a miner will mine 2,700 approximate transactions into a block and put it in the blockchain. For that, he gets reward of 12.5 Bitcoin at the moment. But if there is a transaction fee related to those transactions, he will get those
Mhm.
transaction fees as well. All right.
Okay.
So if a transaction does not have a transaction fee, it will be an orphan transaction lying in the queue. So the miners will
Okay.
not pick up a transaction which has zero transaction fee. He will pick up something which has some reward to it, because it will add to his reward value, right? So if there is zero transaction fees, there is a possibility that the transaction is lying orphan. That's why it is recommended that you add some, maybe like a 10 rupee or a 15 rupee
Okay.
transaction fee, so that in due course it gets picked up. But if it
Okay.
does not get picked up and you have the private key, you can go and cancel that transaction or add some more fee to it and do a
Hmm.
small transaction on top of it, so the transaction gets processed.
Okay. So you are saying that even if there is no other transaction in the queue,
Hmm.
but because there is no
No, if
incentive
there is
to the
no, if
miner.
see, this is on an assumption, because there are always transactions in the queue. If there is no transaction in the queue, every 10 minutes by the protocol, the blockchain has to create a block, right? So if there is no transaction in the queue and say there are just 100 transactions, any miner will and definitely pick up that zero price, the zero
Okay.
transaction fee transaction. But
Okay.
if
Okay.
there
So
are queue, you need to
yeah,
be.
then yeah, I get a point. Okay. Thank you so much. So thanks both of you. Can I give both of you, your last parting thoughts, 2 minutes, Siddharth first and then Mr. Saran.
Yes,
Uh,
sure. So
so
hmm,
whatever, there's been an interesting discussion. What is your parting thought?
yes. So I would just like to pick a few uh, comments which were discussed earlier in the thing. I wanted to comment it right there, but then I couldn't get a chance.
No, no, no
So
worries.
first of all, like the World Bank in 2014 issued a report which said that Bitcoin is not a Ponzi scheme, because it's not a deliberate Ponzi scheme. That is the word. I
Okay.
noted it. And also the
Mhm.
Swiss Federal Council also said that elements of profits is lacking, and hence it cannot be considered as a pyramid scheme. So people who
Mhm.
consider that Bitcoin is a Ponzi scheme, usually Ponzi schemes don't last for a decade. They come, they go
Okay.
in a couple of years, and it has
Yeah, yeah, yeah.
been there ever since. And the price is
Mhm.
very volatile. It has seen the bottoms and it has seen the highs. So I
Mhm.
won't say it's a Ponzi scheme. Uh, Another thing which Prashant sir said was, he said it's more of a toy. If it is a toy, then why is it, you know, freaking all the governments around the globe? Because it has grown in such a manner, and people are getting more educated. We all have WhatsApp, we all have Google. We can learn how economics works. So people have understood the potential which a decentralization has, which centralization does not give you. So the entire global governments, the Fed, and the finance ministries, they are understanding the potential threat it can evolve in future, evolve to be in future, and that's one of the reasons. coming to regulations, I think you cannot regulate Bitcoin, but the ecosystem needs regulation. Like uh, Prashant sir is from SEBI, he knows much better than what I do about an IPO coming into a market where a company is trying to raise funds. They
Mm-hmm.
must have minimum compliances. It should be a private
Okay.
limited company in existence for certain years. It should be profit
Mm-hmm.
making. It should have some assets. In ICO, there is nothing like that, right? You can just go online, create a smart contract, create a website, and
Okay.
shoot out to people that I'm coming out with Krivaco coin. Please invest in us. They will get investments in Bitcoin and they will run away with the money. Uh, I think the ecosystem needs regulation where there should be minimum compliance requirements for ICOs. There should be compliance requirements for exchanges. There should be mechanisms and formats for exchanges to report it to the government, because the government must understand that they cannot stop this ecosystem from evolving. It is better to regulate it so that the investors and the consumers and the citizens of the country don't get scammed. So
Okay.
here I would
Thanks.
say
Yeah.
regulation, the
Mm.
faster we do it, the better it is.
Okay. So your main view is you are kind of crying for regulation.
Yes,
Although, as Mr.
they
Saran
must
said,
regulate
it
it,
is
because
against,
if we
yeah,
don't regulate the
yeah,
potential market, we will see it. You cannot stop regulation evolution from happening. It will
yeah, yeah,
be people, Indian entrepreneurs will go to countries like Singapore and they will start
yeah,
their
yeah. I understand.
businesses over
It is
there.
like,
It's
the
a global
P2P.
thing,
Yeah,
right? You can go in Singapore and operate with with somebody in, like how
yeah,
Carnegie
yeah, I
is there
understand.
in US and you
Yeah,
are here, right? So
yeah, yeah,
it is definitely going to evolve, but I don't want India
yeah.
to lose this potential, because India has one of the smartest IT minds on the planet.
Okay, sure.
So,
Thanks,
and they
thanks.
are going
So I
out. So
understand.
I
Yeah,
wanted to stay
yeah,
here and grow. And
yeah.
of
Okay,
course, the government
thanks,
will
thanks.
earn a lot of tax.
Yeah, yeah. Okay, thanks. So, Mr. Saran, your parting thoughts on,
Uh,
where do you see this on
well,
net value?
let me come back to the toy thing. Why I'm saying it's a toy? The reason is this, that at such meager usage, I mean, right now, as you compare to the total ecosystem of fiat currencies, the Bitcoin is a meager usage. With
Yeah.
this meager usage, it is consuming 76 terawatt hours, which are the consumption of Australia. So much of energy it is consuming.
Oh,
If
you're
it
saying,
becomes
okay.
even a serious thing, it will be an environmental disaster. So
Can
this
I
is
comment here, sir?
1 minute,
no,
Siddharth.
let me complete
Yeah,
at least.
yeah, Siddharth.
Yes.
Yeah.
The second thing why I'm saying it's a toy, because it is not, it's technologically quite early, very, very early technologically. The reason which I say is this, that the entire system is built on traditional chip computing. The day and the quantum computing will come, the entire scenario will change, and the kind of power the quantum computers are going to have. One thing I was reading, that Google is almost completing their Syracuse quantum computer,
Okay.
which they which they claim that will have 3 million times powers of IBM Summit. IBM Summit is the fastest
Yeah.
supercomputer,
Fastest
having
super.
so 3 million times that fastest supercomputer. So the entire system will go really topsy-turvy, and it is not only bitcoins which will be affected very badly. It will be generally the fiat currencies. They will also have, I mean, the banks, they will be really worried about their security issues. But the issue problem is this, that the governments will be in much better position to scramble for quantum computer, to have encryptions, upgrade it to those levels like lattice encryption and all those things. So Bitcoin as a technology today, with the quantum computing coming, it will be a kind of a it really, you don't know what's going to happen with that. So, there are major issues with it, and at every point of time there is a underlying philosophical issues there, that if you are losing the narrative of freedom, you are losing the cryptocurrency rationale itself. If you are asking the governments to come in, then you are not cryptocurrency people.
So Sidharth, sorry, I'll have to end this here. So I would like to really thank both of you for bringing very interesting perspectives, and would love to thank the audience who have joined us on Zoom and YouTube, who have been very, I would say, very engaging audience with number of questions. My apologies that we haven't been able to answer all the questions, and trust me, this is one of the first webinar we are organizing on cryptocurrencies. At Carnegie India, we are doing a lot of research on not just cryptos, but central bank digital currencies. So I look forward to engaging with all the audience from around the world and the two panelists, and to look forward to more and more discussion. And thank you very much. Thanks a lot.
Thank you so much. Thank you so much, Rajesh. Thank you so much, Prashant sir.
Thank you.
Bye.
Yeah, Ayush, we have stopped.